another European country has implemented a huge tax on cryptocurrency transactions. Welcome to Altcoin Capital, where we share news and information regarding cryptocurrency, real-world market, and money-making strategies that can help you and your assets grow. For today's video, we would like to share news about another country in Europe that has set a large tax on cryptocurrency. We all know that different countries all over the world seek a way to regulate and control blockchain technology. It is still a major problem for these countries because of the fact that they cannot control the flow of money within the blockchain. In one of our recent videos, we tackled a country in Asia making a move on digital currency and placing tax on cryptocurrency. I'll put the link in the description down below, and you could check the video if it piques your interest. We just want to remind everyone that we're not registered financial advisors. We're a bunch of investors who love to share our experiences with you, our beloved viewers, who love to learn more about the world of money. Let's have a look at this news and what could be the potential move of other countries for blockchain technology. Cryptocurrencies are not recognized as legal tender in Slovenia, but are not banned either. Capital gains from cryptocurrency activities are subject to a 19% tax, while income from cryptocurrencies is taxed at a rate of 24%. Cryptocurrency exchanges and wallets are not regulated by the government. The Slovenian government introduced a draft bill this month proposing a flat rate tax on crypto bonuses and called on the parliament to swiftly pass it. The government has chosen to impose a new tax on virtual currencies as part of its post-COVID recovery strategy. When virtual currencies are sold or exchanged, the planned tax will be due, and it will be set at a rate of around 5%. The objective is to assist or debureaucratize and simplify the current system, and to also help the government with revenue. According to the press release announcing the bill, if it is implemented, Slovenia will be one of the few nations, if not the only one in the world, with such a straightforward taxation approach for digital currencies. The country's financial regulator initially announced the initiative last year. According to government documents, the tax will be levied at 5% of the value of the redemption after a €10,000 allowance is subtracted. The Financial Administration, on behalf of the federal government, proposed that a 10% tax rate be applied to cryptocurrencies spent or converted into cash in August last year. It would be a huge help to FURS in their attempts to generate accurate tax returns by no longer having to check the many transactions the taxpayer has done between or how many different cryptocurrencies they have acquired or sold. Under the new plan being put forth, the taxpayer would need to show that they incurred a loss, which implies all transactions would have to be investigated. The Slovenian government is taking a wait-and-see attitude to cryptocurrencies. The Financial Stability Board of Slovenia issued a statement in December 2013 warning investors about the dangers of investing in Bitcoin. The government has not yet introduced any cryptocurrency legislation. By simply registering the total value they received when selling crypto rather than the complete history of their transactions to demonstrate they made money or suffered a loss, citizens would be able to figure out their crypto-related taxes quickly and easily. Well, why would these different governments seek ways of putting and implementing tax within the blockchain technology? As an example, let's use the protocols and insights of our country, USA. Cryptocurrencies are treated as property rather than currency by the IRS, which means that they are not suitable for usage as a functional currency. This distinction implies that cryptocurrency may not be used as functional currencies under the Internal Revenue Code. US taxpayers, on the other hand, must disclose transactions involving cryptocurrencies in dollars on their annual tax returns. The IRS requires that you compute the fair market value of your cryptocurrencies on each transaction date to determine if you owe tax. Individual taxpayers must record the price at which their virtual currencies were purchased and sold as a consequence of this regulation, making reporting them to the IRS time-consuming. Furthermore, cryptocurrencies are considered capital assets in the United States. As a result, individual investors may be taxed on any profits they make from cryptocurrencies. This obligation exists whether investors bought their cryptocurrency locally or elsewhere. Nevertheless, it is unclear whether US consumers who acquired their crypto holdings on foreign exchanges must submit additional tax reports upon filing their taxes. Cryptocurrency value is not constant and is completely dependent on the value that other owners and investors ascribe to them. Their worth is totally reliant on the worth others assign to them, rather than being backed by a central authority. Since they are not regulated by any centralized body, investors may have few legal options if problems arise from their cryptocurrency activities or investments. The United States has legalized cryptocurrencies such as Bitcoin since February 2020, and other industrialized countries have followed suit. Despite the IRS's recognition of Bitcoin and other virtual currencies as lawful, several questions remain about their legality. Despite the risks, some people believe that cryptocurrencies have the potential to revolutionize the financial system. They could make it easier and cheaper for people to send and receive money. Cryptocurrencies could also help reduce fraudulent activities such as identity theft and money laundering, because the IRS treats it similarly to equities, bonds, and other capital assets. It depends on how you obtained your cryptocurrency and how long you kept it for tax purposes. The money you make from it is taxed at multiple rates, either as capital gains or income. It's crucial to examine how you used your crypto in 2021 to determine whether or not you owe taxes. Taxable events are transactions that result in a tax liability. Non-taxable events, on the other hand, are transactions that do not have this consequence. Let's look at each one separately. Simply buying and holding cryptocurrencies is not taxable on its own. When you sell, the tax is generally assessed later, and the profits are realized. If you give crypto to a charity directly, such as givecrypto.org, you may be able to deduct value from your taxes. The IRS permits you to give up to $15,000 per recipient each year without incurring gift taxes, and you can give higher amounts to those who have spouses. If your gift exceeds $15,000 per recipient, you'll need to file a gift tax return, which generally does not result in any current tax liability. Sending crypto can be considered a taxable occurrence, so it's important to be aware of the rules before you make a move. It's not taxed to move cryptocurrencies between wallets or accounts you control. To keep track of your potential tax impact when you eventually sell, you may transfer over the original cost basis and date acquired. Have you sold your crypto for dollars? If you sell your belongings for a higher amount than what you paid for them, you will have to pay taxes. You may be able to deduct the loss if you sell at a loss. When you trade Bitcoin for Ether, for example, you must first sell your Bitcoin before acquiring a new asset. Because of its sale, the IRS considers it taxable. If you sold your Bitcoin for more than what you paid for, you'll be charged tax fees. To the IRS, spending Bitcoin is no different than selling it. You must sell the asset before it can be exchanged for a good or service, and Bitcoin sales are subject to capital gains taxes. Also, if you received cryptocurrency as an income, it will be taxed. Incomes from mining crypto, holding crypto just like in the stock market, and even receiving rewards are taxable. Well, we don't know what the future will hold for blockchain and cryptocurrency, but seeing that many big names in different industries are investing in it and different governments are concerned on regulating it, we can say that it will be a big part of our society for years to come. The wonderful thing is that even if efforts on controlling it are discussed, the developers and makers of the blockchain made a serious amount of effort to make sure that everything within it is decentralized. Anybody can enjoy what they own and make their own without the restraints of many laws and paperwork from our government. Well, for now, hopefully it stays that way in the future. So that's all for today's video. We always hope that you learn and enjoy our videos. Drop a comment down below if you want to see more kinds of content like this, where we share news to you all. Don't forget to leave a thumbs up, hit the subscribe button, and turn on the notification bell so you'll be able to keep up with our future videos, where you can also learn more in the world of money. This is Altcoin Capital signing out. Until next time.